recently invested in Bitcoin? Then it will come as no surprise to you that the popularity of cryptocurrencies as an investment option only continues to rise in India. The latest sign backing this trend comes with WazirX saying that it has seen a staggering 2,648% growth in user sign-ups from India's Tier 2 and Tier 3 cities. The cryptocurrency exchange has over 7.3 million users and has clocked over $21.8 billion in trading volume in 2021 till date. The firm has also said that Tier 2 and Tier 3 cities have driven almost 55% of total user signups on WazirX in 2021. Another finding has been that women from Tier 2 and Tier 3 regions contribute to 65% of the total signups by women from all over the country. Consider also that CoinDCX recently became India's first cryptocurrency unicorn after it raised 6.70 billion rupees from investors. The funding came through even as local authorities pushed back against cryptocurrency assets. Chief Executive Officer and co-founder Sumit Gupta said in an interview that the latest funding round values the exchange at $1.1 billion. If that's not enough to convince you of crypto's growing currency, then we have a data point that will certainly catch your eye. According to Chainalysis, investments in crypto grew from about $200 million to nearly $40 billion in the past year in India. This massive jump came despite the outright hostility towards the asset class from the Reserve Bank of India and a proposed trading ban. According to Bloomberg, as of June this year, the number of Indians buying and selling digital coins stood at more than 15 million. That's in comparison with the 23 million traders of these assets in the US and just 2.3 million in the UK. Now contrast all this with the regulatory vacuum for cryptocurrencies in India and you realize that something isn't quite right. Recently, the legislation on digital currencies wasn't tabled. The Cryptocurrency and Regulation of Official Digital Currency Bill 2021, which aims to prohibit all private cryptocurrencies, was originally listed for the budget session but was never introduced. That's not all. Early in July, Reuters reported that India's cryptocurrency exchanges were scrambling to secure viable, permanent payment solutions after banks and payment gateways started cutting ties with them. The exchanges were reported to be struggling after the RBI informally asked banks to steer clear. Most recently, the government said that it would take all measures to eliminate the use of crypto assets in the funding of illegitimate activities or as part of the payment system. So where do things go from here for crypto traders? We have Business Standards Devanshu Datta with us to delve deeper into the state of crypto regulation in the country and to outline what steps the government and regulators need to take going forward.
The regulatory situation regarding cryptocurrencies is a bit of a black hole. There is no clarity on what these things are. Are they currency? Are they art? Are they any other kind of fungible object? So you don't have clarity on the tax treatment. The RBI has tried to get it shut down, but failed because the regulations they put in place violated fundamental rights in the constitution. At the same time, there are a lot of Indians who are speculating in cryptocurrencies. So it's quite a difficult situation to understand. There are threats by the government every so often that they will ban cryptocurrencies. There are also vague statements saying we will put in a digital rupee, and at the same time there's no follow-up on any of this.
Next, we move to what the government and regulators need to do.
First thing I think that the government needs to do is clarify the tax situation. You cannot stop cryptocurrency trading. It is simply too easy. To stop it, you would have to stop the outflow. You would have to stop Indians from investing abroad in any capacity. because it is perfectly possible for you to simply set up a brokerage account abroad where you trade cryptocurrencies. It is perfectly possible for you to set up a company abroad where you trade cryptocurrencies. And if you do that, then you block normal commerce. So you block exporters, you block importers, you block IT, meaning information technology companies, you block pharmaceuticals, you block your Zomatos, etc. So you can't do that. So you have to live with the situation. You need to set up a clear tax treatment of these instruments. Second thing is you will have to review your foreign exchange controls and your methods of remittance, because again cryptocurrency is very easy to do across border trade. In fact, a lot of people use them precisely for that reason. You can buy Bitcoin, let's say, in dollars, walk into the country and sell them in rupees without any kind of paperwork required, provided you can hold the numbers, the relevant code words in your head. I think under those circumstances, currency controls and normal remittance starts looking like a joke. So you'll have to look at easing up on currency controls, which is another thing that the Indian government first promised to do in 1993 in the budget, but hasn't really done in the next 28 years. So you may finally be forced to do this. You would also have to set up reasonable KYC norms to trade these instruments in India if you so desire. Because otherwise the bulk of the trading will happen abroad, which means there will be rupee flight for reasons that you don't like. You will also have a scenario where a lot of people who are remitting money to India, and we're talking about 70 billion, 80 billion USD worth of annual remittances, a lot of that will start coming in through the cryptocurrency route because it's much cheaper and much more hassle-free than doing a standard remittance via bank transfer. So these are areas the government really needs to look at. If it doesn't take sensible decisions, it will find that events have overtaken it anyway.
Time alone will tell whether cryptos will get banned in India or not. In the meantime, keep in mind that crypto assets are unregulated in India. Therefore, there is a high potential risk in owning or trading in them.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.